Here we go, a new edition called AutoZone, AZO. And it's a listed stock, and it's an introductory in the MMT market maker division. What is a market maker? Someone who makes a market between the buyer and the seller all day. That's who that is, and that's who we are, and that's what this school is about. So we can take a look at the primary example of how AutoZone. We would like to point out that AutoZone is a very light stock, 230,000 shares. And there is an art to trading very low volume stocks. And MMTs will learn how to trade within the bid and the ask of the buyers and the sellers with AutoZone. And that AutoZone has great movements intraday, because it does. The last movement that AutoZone had was about 7.48 in the range. So it's a listed stock, high beta, but we're going to take a look here at the gap. Price gap. How do I trade an opening gap? Look, MMTs on AutoZone. Once it gapped up to the highs, it held, you had this 3-minute qualifying bar. That's 3 teenies up. That is the qualifying bar. Always 3 teenies in movement. You got to have that green bar from that price opening gap. It comes back down and it puts in the very same bottom, but immediately it starts to expand, and then this is what we call a rectangular consolidation before we actually, so let's take out the first breakout phases of this. It starts here on the opening bell. That's the gap in AutoZone. It pulls back. It's thinly volume traded. We know that the platform, that support level is going to be there. We get within one teeny, 2 teenies through this whole period. Right in here, it constricted. We came up off the low, and the lower teeny line and the upper 2 teeny line up was where it was trading. And that is a rectangular 2 teeny consolidation in AutoZone. It's very, very important that we understand how these patterns work on the opening bell before you finally take out these opening bell resistance tops with a vengeance. And what is a qualifier? It's always the fat green bar next to the red. It's always that teeny expansion or ascending or going higher to the next teeny and expanding, but then holding on these wicks, holding above these half bars in here, meaning that now I'm consolidating at a higher teeny level and I finally make that breakout. And what is that breakout always going to be? 1, 2, 3 teenies up there. This one was working on it, and we got on the opening bell. This is how AutoZone traded on what we call a gap sequence. So AutoZone has a gap sequence to it. This is what it looks like, MMTs, and we break higher, and it likes to pull down. 1 teeny, 2 teenies. Immediately snaps back, takes out this little 12-minute teeny down line. And what is a teeny on it? 26 cents per line. That's all it is on AutoZone. Now you can clearly see here the 2 teeny up move, and you can clearly see how we begin to consolidate this opening bell from the gap open to the rectangular consolidation, ascending breakout with the correction, 2 teenies down, testing the breakout through resistance here and testing it, and then coming back up and actually putting in the higher high and still consolidating the move. It's all about the identity of expanding price action or ascending price action and how you take it out on the opening bell with the gap, meaning you don't come back down 1, 2, 3 teenies and test the lows. No, you do not. You do not even get close. You stayed with a 1 mandatory qualifier, 2 teeny expansion from the previous day's close, rectangular consolidation breakouts, short-term shorts, knowing when to get out. Now let me pause the tape. This is this on the opening bell. Let's take a look at another time where AutoZone did the same thing. So that now here's another gap sequence on November 11th right here. So let's take a look at it. The one I showed you was over here and up to the tops. Now let's take a look at what this high. Here is another opening bell on AutoZone. Once again, you take a look at one teeny, two teenies, 3, 4, 5, 6 of those teenies to the gap high, but it comes down within milliseconds. It holds this half bar support, meaning that this teeny line, you were still up 1, 2, 3 teenies, qualifier, mandatory. Immediately the diamonds broke higher and you broke out to this day's high on how AutoZone will trade. But notice that AutoZone comes down 1, 2, 3, 4 teenies to test the original opening gap up sequence. It's a gap up. It's a qualifier. It makes the higher highs. It pulls back. It takes out the double diamond resistance here, and bam, there's that intraday high from another daily opening gap on November 11th. So AutoZone, once it gaps up and it holds above a certain distance here on that opening bell, and that breakout bar, once again, 1, 2, 3, 4 teeny breakout bar, that's that bottom gap to that high. That's that pullback, but there's that diamond breakout, breaking the highs, and understanding the strength before it goes the longer distance in the breakout. And we are introducing AutoZone on the behavior, the opening bell. We've just covered 2 daily gaps on AutoZone. Now in the next live video, just so you know what's coming, is we'll find out how you can understand. Well, we'll just show it right here. When you get to a certain top, you're going to have these intraday reversals, and they're going to be clean. So you start over here where the resistance of the teeny was, and that's this line. 1 teeny, 2 teenies, 3 teenies, about 3.5. And it comes down, but look at the diamonds. It tests the low here where it was. You're going to have, what you always want to see is the contraction from the top teeny to the support teeny is 2 teenies, and that it just goes up and down intraday. If it breaks down and tests it, you can see that you have to have it immediately get back above the teeny line. And that's how AutoZone will trade, because AutoZone only has 230,000 share volume for the whole day, and it's a high price beta listed stock. You're going to have to learn how to steal the bottom end of this entry here and selling out toward the top end of the entry there. And that on certain days, AutoZone will have downtrend days, longer trends. They're not all going to be, this is a gap sequence. That gap one on this day and how it traded to the highs, and another opening day right here on November 11th, another gap up, and it's all on the video, and how they make their highs, and knowing when to sell out, knowing when you're going to want to sell out from these trades is the most important thing. Getting in them, understanding that runaway gap and that gap support level, and how you go intraday to make those intraday highs on AutoZone. And when you do finally get the highs, you're just in a daily long period of time. I mean, I made the high right here on 11/11/2011 at 11:30 Eastern time. And heck, by the time I ended up at the closing bell over here at these diamonds, this here was 3:57, 4 o'clock p.m. Eastern time on the close. And we digested the bigger part of that breakout in AutoZone, and we did. We were within 1, 2, 3 teenies down and 3 teenies up. Sometimes you slip an extra one, but it's accurate. And all that meant was, moving forward, AutoZone has a strong base on the closing bell on Friday. Introducing AutoZone, introducing gap sequences on AutoZone.